Hello and welcome to the Abakuas Whitepaper Cafe. We understand that time is limited, so we will read the white papers for you. Listen while you drive. Listen while you lounge. Listen while you clean. I am not a financial advisor, and this is not financial advice, but I do want to provide you with ease of information in order to make the best financial decisions you can. This crypto was chosen at random or at the request of a listener. Augur, a decentralized oracle and prediction market platform, version 2.0. Jack Peterson, Joseph Krug, Micah Zoltu, Austin K. Williams, and Stephanie Alexander, Forecast Foundation, dated March 30th, 2021. Augur is a trustless, decentralized oracle and platform for prediction markets. The outcomes of Augur's prediction markets are chosen by users that hold Augur's native reputation token, who stake their tokens on the actual observed outcome and, in return, receive settlement fees from the market. Augur's incentive structure is designed to ensure that honest, accurate reporting of outcomes is always the most profitable option for reputation token holders. Token holders can post progressively larger reputation bonds to dispute proposed market outcomes. If the size of these bonds reaches a certain threshold, reputation splits into multiple versions, one of each possible outcome of the disputed market. Token holders must then exchange their reputation tokens for one of these versions. Versions of reputation which do not correspond to the real-world outcome will become worthless, as no one will participate in prediction markets unless they are confident that the market will resolve correctly. Therefore, token holders will select the only version of reputation which they know will continue to have value, the version that corresponds to reality. Augur is a trustless, decentralized oracle and prediction market platform. In a prediction market, individuals can speculate on the outcomes of future events. Those who forecast the outcomes correctly win money, and those who forecast incorrectly lose money. The price of the prediction market can serve as a precise and well-collaborated indicator of how likely an event is to occur. Using Augur, people will have the ability to trade prediction markets at a very low cost. The only significant expenses participants assume is compensation to market creators and to users that report on the outcomes of markets once the event has taken place. The result is a prediction market where trust requirements, friction, and fees will be as low as competitive markets forces can drive them. Historically, prediction markets have been centralized. The simple way to aggregate trades in a prediction market is for a trustworthy entity to maintain a ledger. Similarly, the simplest way to determine the outcome of an event and distribute payouts to traders is for an impartial, trusted judge to determine the outcomes of the markets. However, centralized prediction markets have many risks and limitations. They do not allow global participation. They limit what type of markets can be traded or created, and they require traders to trust the market operator to not steal funds and to resolve markets correctly. Augur aims to resolve markets in a fully decentralized way. Decentralized, trustless networks such as Bitcoin and Ethereum eliminate the risk that self-interest will turn into corruption or theft. The only role of the Augur developers is to publish smart contracts to the Ethereum network. The Augur contracts are totally automated. Developers do not have the ability to spend funds that are held in escrow on contract, do not control how markets resolve, do not approve or reject trades or other transactions on the network, cannot undo trades, cannot modify or cancel orders, etc. The Augur Oracle allows information to be migrated from the real world to a blockchain without relying on a trusted intermediary. Augur will be the world's first decentralized oracle. How Augur works. Augur markets follow a 4-stage progression: creation, trading, reporting, and settlement. Anyone can create based on any real-world event. Trading begins immediately after market creation, and all users are free to trade on any market. After the event on which the market is based has occurred, the outcome of the event is determined by Augur's oracle. Once the outcome is determined, traders can close out their positions and collect their payouts. Augur has a native token. Reputation, ticker symbol REP. REP is needed by market creators and by reporters when they report on the outcome of markets created on the Augur platform. Reporters report on the market by staking their REP on one of the market's possible outcomes. By doing this, the reporter declares that the outcome on which the stake was placed matches the real-world outcome of the market's underlying event. The consensus of a market's reporters is considered the truth for the purpose of determining the market's outcome. If a reporter's report of a market's outcome does not match the consensus reached by the other reporters, Augur redistributes the REP staked on the non-consensus outcome by this reporter to the reporters that reported with the consensus. By owning REP and participating in the accurate reporting on the outcomes of events, token holders are entitled to a portion of the fees on the platform. Each staked REP token entitles its holder to an equal portion of Augur market fees. The more REP a reporter owns and reports correctly with, the more fees they will earn for their work in keeping the platform secure. Although REP plays a central role in Augur's operations, it is not used to trade in Augur's markets. Traders are not required to participate in the reporting process, so they will never need to own or use REP. This is page 1 of the Augur white paper. Please click on the next video to listen to page 2. Thank you for listening. Please leave us a like. If you're new here, click subscribe and share with a friend. Until next time, gain knowledge and take action.